Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the stranger things this week was Hertz's earnings call impacting Tesla. Now, these are two companies that have worked together for a few years now. Hertz said a few years ago that they were going to buy 100,000 Tesla vehicles. They haven't quite gotten to that point, but it seems like they're really going to pull back on their purchases from Tesla. And the reason is the costs are much higher from an operating standpoint, and the resale value of those Tesla vehicles are much lower than they thought they were going to be. So that's what I want to dig into today is exactly what Hertz is thinking, what it means for customers, for Tesla, and even Uber drivers, because that's the other thing that people aren't talking about this right now, but I think Uber drivers are going to be hugely impacted because they have a partnership with Tesla as well. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to thank this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. Now, I want to start with a couple of comments that Hertz's CEO made, because I think these put the disappointment that they had into some context. You can see in this quote here, they talked about MSRPs, or the price point for electric vehicles, coming down throughout the course of 2023, driven primarily by Tesla. And that has changed the fair market value of Hertz's vehicles. I'm going to get into exactly what that means in just a minute. And then he actually goes on to say, by contrast, market values in portions of our fleet, so this would be the non-EV portion of the fleet, were higher than they were a year ago, saving some salvage value. So actually, for Hertz specifically, it has been more profitable to own internal combustion engine vehicles than it has been to own electric vehicles, something that people should really take note of if you think that electric vehicles are lower cost. Here's the other quote, and this is very long, so if you'd like to read this whole thing, just pause the video. I thought this entire comment was really important context because it talks about Tesla specifically having higher costs than they were anticipating. They talk about damage. Now, not entirely clear if people who are driving Teslas are driving them differently and damaging the vehicles a little bit more than they do driving, let's say, a Chevy Bolt. It is pretty clear that fixing these vehicles is much more expensive than either a General Motors vehicle, which is one that they call out here, or a typical internal combustion engine vehicle. So that's something that I think is really notable, is that the cost of ownership is something that's much, much higher for Tesla vehicles specifically than Hertz was expecting. So this could potentially hurt demand for Tesla's vehicles and really make them think twice about continuing cutting those prices, because big customers like this are upset about the fact that if they're going to lose value in the resale of those vehicles, then that's going to be a real negative for their financials. So this sounds a little bit like Hertz's CEO complaining about Tesla, but I want to put the financials into context because this is what's really important. A rental car company is not in the business of trying to save the world by buying more electric vehicles. They're in the business of making money renting cars out. And you have to think about how that works from the time they get the vehicle to the time they sell the vehicle. There are really three things that impact their profitability: what they're paying for a vehicle up front, how much they're charging to rent out that vehicle, and how many days that vehicle is charged out. That's something that Hertz is in charge of, managing their own fleet, making sure that they can charge a high enough price for the rentals that they have on the market. And then the third thing is, what can they sell that vehicle for? Hertz does not own vehicles until they're driven into the ground. In fact, most of Hertz's vehicles are going to be relatively new. So it really matters what that price point is they're buying vehicles for and what the price point is that they're selling vehicles for. When management talks about MSRP reductions hurting their financials, it's because they were paying a relatively high price a year, 2 years ago for Tesla vehicles, and now suddenly those vehicles are selling for $15,000, $20,000 less in the marketplace than they were previously. So when they go to sell those vehicles, they're going to have to sell them at a discount to what they were originally anticipating. That's where you're seeing the losses for Hertz on Tesla vehicles, is that they were anticipating a certain amount of decline in value. That's what they had priced in. And they anticipated, based on that purchase price, what they were renting vehicles for, how long they were owning them, that at the end of it, they would be able to sell them and make a profitable investment. But that does not appear to be the case, at least on the vehicles that they have bought in the past. So how are they going to remedy that? Well, there's two things that they talked about in the conference call. One was moving more to specifically GM electric vehicles. I think that was really interesting. And there's two reasons for that. One, it appears that people maybe drive them a little bit differently. They're designed a little bit differently, not quite as high performance. If you're a rental fleet company, you don't want people going crazy with your vehicles. You actually just kind of want them driving slow and not taking a lot of risks. So maybe something like a Chevy Bolt makes more sense in the fleet than a Model 3. They also have much more infrastructure maintaining and repairing those vehicles. General Motors, you can think of GM, Ford, Stellantis, all have much bigger repair fleets than Tesla does. Those parts are also much more available. If you have followed Tesla for any period of time, you know that repairing Tesla vehicles can be both very costly and very time consuming. It isn't just taking it to the local shop. You may not have a vehicle for weeks or months, depending on what sort of repair needs to happen. So those are the kind of considerations that are going on at Hertz, and that impacts Tesla. Now for Tesla, the impact for them is going to be fewer sales into these fleets. Hertz was really on the leading edge here. So if they're pulling back their purchases from Teslas, that means that there's going to be a big number of vehicles that are not going to be acquired by not only Hertz, but probably also other customers who are worried about the same kind of financial impact that Hertz was. So that takes a pool of buyers and probably takes them almost entirely off the market for Tesla. But management did say that as costs come down, they will be interested in adding more electric vehicles to the fleet. So that could be Teslas, that could also be GM vehicles or someone else. But that means that they're interested in buying those vehicles if they are at a lower price. That lower price is inherently going to be at a lower margin. That's exactly what we've seen in Tesla's financials over the last year, is margins just dropping like a rock. And they're now more in line with traditional automakers than they were with Tesla's margins 2 or 3 years ago. So it looks like that kind of price pressure is going to continue, whether you're looking at Tesla for electric vehicle sales or GM or Ford or any other automaker. That price pressure is not going anywhere. Now, the final thing that I wanted to bring up is something that I have not seen people talk about, but that's the other big partnership that Tesla has, and that's with Uber. And this is to get Uber drivers into Tesla vehicles. If you have used Uber recently, it's really shocking the number of Ubers that are actually Teslas. And one of the reasons for that is financing and incentives for Uber drivers to buy Tesla vehicles. Now, Uber drivers are not the scale of Hertz, but they're going to run into the same financial challenges. If you buy a Tesla vehicle for $40,000, $50,000, and your primary source of income is going to be driving that vehicle around, and you suddenly find out that your maintenance costs are higher than you thought they were going to be, that the resale cost is lower than you thought it was going to be, now suddenly being an Uber driver with a Tesla is not as profitable as you thought it was going to be. And this is going to be something that is going to happen to potentially tens of thousands of Uber drivers. And that financial impact is going to be theirs to take, not on a big company like Hertz. So I think very different impacting Uber drivers versus impacting a company like Hertz, who can take this hit and make a little bit different decision. So something here to think about, especially if you're a Tesla investor, you think that the company is going to be able to grow sales. It may actually be facing some headwinds from some of these fleet buyers and even Uber buyers who are finding higher costs and lower resale values to be a challenge making their economics work. And so I think at the end of the day, that's going to just mean we're going to see lower prices and lower margins at Tesla. I've covered that a number of times here on this channel, but it seems like that trend is going to continue. So really important context for Hertz, especially if you are an investor in Tesla, because they really tell what the numbers are on a large number of Tesla vehicles. And the fact that Tesla is higher maintenance costs than its competitors, and now we're facing these resale challenges, is really telling for the ultimate economics of owning a Tesla vehicle, which was always one of the selling points. So love to hear your thoughts on this. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.